they want to someday, getting ready. All right, so how do we want to approach this? We're doing the uni one now then, huh? Let's write down everything we know, okay? So we're going to do muni now. Come on, there it goes. Okay, so we're going to do muni. And I think I'd set it up with assets equal liabilities plus equity, wouldn't you? Revenues less expenses is going to be net income. And now that I screwed up the first one, my home problem is done over and over. Okay, anyway, not really screwed up. It was okay to do contributed capital and have to split it, but it'd be faster, seeing as I know I'm going to do it this way, to do contributed capital and retained earnings separately, okay? Okay, so yeah, so because I've got two accounts I'm working with in equity, I set up T accounts. That's all, right? If I didn't have to do retained earnings separate from contributed capital, I wouldn't bother with that, huh? It'd be faster. Okay, anyway, so let's write down everything we know. Liabilities at the end are 180. What are they at the beginning, by the way? 0, yeah, we still know that, don't we? Okay. So 180 liabilities at the end, we got that one, okay? And then we know retained earnings at the end is 100. What was it at the beginning? 0, okay? So somehow it went up by 100. That means they earned at least 100, right? They paid no dividends, they earned 100. Because the net income is going to increase it, isn't it? Right? Net income is going to come in here and going to bring it up to this ending balance. Everybody got that? Okay, that makes sense, doesn't it? So we got that one. And then we got expenses are 180. Okay, that's fine. That's a 180. Okay, and then dividends are 40. I know dividends are 40. I think I have something made here. Do you? Oh, and then there was one other thing. You got to remember, they put $35,000 in every case. So it started with nothing. They put in 35. They didn't take out any. So what's the ending balance in equity you get, or contributed capital, guys? 35. So I can solve two different things. What could I solve right now? What could you solve right now, guys? I could come up with what? 35 plus 100 is equity of 135. Is that right? Is there anything else I could calculate right now? Assets? No, not until I put that up there. But I mean, even before I do that. Because see, there's two unknowns. Assets and equity are both unknown. Revenues and net income are both unknown. I can't solve that yet. I can't solve two unknowns at once here, right? It's not a simultaneous equation thing. Okay, so, but I could solve, add 35 and 100 to get my equity, and now I can add that to the liabilities to get my assets. That's true. But what else could I solve if I saw it first? Beginning retained earnings is 0, dividends is 40, and ending retained earnings is 100. Can anybody tell me what net income must be already? It's what, not 60, 140. Be careful, right? 140. So make sure you add up your debits and credits. So I start with a 0 credit here, right? I end up with a 100 credit at the end, and I took out 40 debit over dividends, right? So if your retained earnings went up by 100, and you took out 40, what must you have earned? Your retained earnings went up by 100, you guys. You took out 40, what did you earn? Not 60. If you earned 60, and then you took out 40, you'd only increase by 20. You mean if you earned $60 today, and you spent 40 of it, you'd have 100? That's what you're telling me. You don't believe that? What would you have to earn today to have 100 left if you spent 40? You have to earn 140, wouldn't you? Yeah. Debits and credits, right? So what I've got here is a credit of nothing to start. I've got a credit of 100 at the end. I know that, right? And I debited it for 40 because it was a dividend. So how much must the credit be for net income? 140. Net income is 140, you guys. Everybody good? Net income is going to be 140 when I plug net income up here somewhere. Okay? Guess I didn't write it down below, did I? It doesn't matter. Okay? All right. And now I know the net income's 140, so I could go in that way if I want, right? Once you've got the net income is 140, and I know the expenses are 180, what must revenues have been? This is a credit to net income. That's a debit that I subtracted from a bigger credit, right? How much was net income? You must have earned 320, right, guys? Revenues is 320, isn't it? You had to earn 320 so that when you took away 180 of expenses, you got 140 net income. Okay? And then what will that do for me? Now what do I want to do? Well, you could add 35 to the 100, right? You get 135. Ending equity? What's 135 plus 180? 315? Is that what it is? Okay, so my assets are 315, and that's it, isn't it? Piece of cake. So is this an unrealistic expectation after 3 days in a class? Hell yes it is. Can you do it? Yes. Cool. Okay. K through 12 was to turn you into a good citizen and give you the basics of knowing how to read, write, communicate, get along with other people and stuff. What's college about? Developing your skill set. So, you bet. You bet. I'm not going to turn you into a better person than you already are. I think my grandson at 6 is who he is going to be in terms of integrity, in terms of intelligence, in terms of maybe even work ethic. Might teach you how to work a little harder because maybe you never worked before. Right? That's okay. That's good for you. You can find out what it really is. I think you did some farm labor in college. You know how to work. Now, you have to work like that at school? Yes. You have to teach your head. Hold the ball. At least you can do it longer. My dad was a carpenter. He retired in his early 60s. My brother was a cement finisher. He retired in his late 50s. Why? They're worn out. Right? My brain's worn out too. As long as nobody notices, they'll let me stay here. Don't tell me. Okay, so we can do this, huh? So if you've got to leave, you can leave. If you want to stick around, we'll do some more of these. You want to? Yeah, but you know, when you need to leave, get up and go. I'm not offended. It's no big deal, right? I know class is over, right? It's your time's your time anyway, right? So some professors get really bothered by you coming and going during their class, or if they're doing a review or something. If we run a review 2 hours some afternoon or something, you can leave here for half of it. Cool. I don't care. It's your business. Get your lives, guys. Yeah, if you need a break, take a break, come back, whatever. We'll work on something, answer some questions. Okay? And maybe I'll go ahead and record it, huh? And then if you do have to leave, you can listen to it if you want to, right? On how to do those other problems. He doesn't want to. He's sick and tired of it. Huh? Yeah, I'll put it up. If I get it to work, the last week we're not good. So I can't imagine how boring that would be to listen to it again. I can't imagine how boring it must be to listen to me the first time. Think about it. I'm not listening. So what do you think, guys? You want to do some more of these? Do you want to do some problems? Make up some?
Well, can we do another one similar to this that we just did?
Yeah, we can do one, I guess. Oh, absolutely. Well, I could probably come up with something, yeah. Let's see. Let's see if I can create one. All right. Sure, make my life difficult. Got to be sure and give you something. Okay, so let's, maybe we'll just add a company below that one. Okay? Maybe do something like that. Is it still recording? Yeah. Okay. Are you going to erase that? I did. Okay. Talking to the guy that is trying to teach me how to use this stuff, and of course he's in Georgia this summer, so he sent me an email. I talked to him. He sent me an email, and I told him, by the end of the summer, maybe I'll be able to make this thing run, And he said, no, 2 weeks you'll be an expert. Yeah, right. Okay, anything. So, at least I'm not killing the hardware all the time. I shouldn't have said that. Probably crash right now. Okay, anyway, so I'll plug some numbers in here. Let's say there is let's say we want to know this one. Come on. We want to know dividends, okay? And let's say our expenses are 200, and let's say our ending retained earnings is 60, okay? Say we had that. Let's say we'd like to know, I'd like to know my revenues. I don't know that. I know my net income is 50. Okay. I'd like to know my, I already gave you one we had, that's okay. I'd like to know my assets How many unknowns do I have there? Three. Yeah, that's right. Okay, and then let's make our liabilities be, I don't know, 350. Okay? Can you guys read those? I know my penmanship is just god awful. But here's what I meant. You want to calculate the revenue, so that's the first thing, right? That's a question mark. Liabilities are 350 right now at the end of the year. Let's still keep the 35, okay? Leave the 35 as a contributed capital, that's fine. Okay? So I've got revenue, right? We don't know. Liabilities are 350. Assets, I don't know. Net income, what number do I have there? 50. That's a dollar sign. 50. Okay? And retained earnings is 60. Everybody good? Expenses are 200, and I don't know the dividends. You want to calculate the dividends. Does everybody have all the numbers now? The net income is 50. That's a dollar sign. 50.
You know what's funny is intermediate, they never ask me. You'll get used to my scribbles. I don't think it's any worse on the smart board than it is on a real blackboard. But it ain't any better either. Yeah. I don't really use changes for a fact. I know it's wrong. My professor uses 8. And he says, shit. Oh my God. So,
Try not to use the F word.
I guess. People say, you ever heard George Carlin's routine on profanity? You haven't? He died recently, the old guy. The old guy knows, yeah. I mean, he's not that old. You're not that old. But, yeah, it's just fantastic. You gotta get that sometime. George Carlin. It's hilarious. He lists every single swear words I'd never heard in my life and never heard again since then. I just made some of them up. And he does them until you're numb. And he points out that it's just letters put together. What a ridiculous thing to be impacted by. Letters put together like that. I mean, we've gotten worse as a society. People are just traumatized by words. So hurry up. Quick on. Got it. Slow. Did anybody get the word out yet? Did I give the right information, enough information? No, anybody gave enough information or the right information? I think I did that. Maybe I got negative or something? What did we hear? Start? Yeah, 35. This is whatever you need to have. They're not 60. I have a pending retained earnings. You'd have to have a negative dividend based on that. We didn't earn enough during the retained earnings. Let me change it a little bit. Let's have an ending retained earnings of something else. Let's do an ending, sorry you guys. Let's do an ending retained earnings of 120. Will that work? No, that still won't work. Let's do it's got to be less, yeah. Let's make the ending retained earnings 30. That'll do it for me. Okay, sorry about that. That made your brain stand a little, huh? A negative dividend? I don't think there's such a thing. 30. Yeah, make your ending retained earnings 30 and it should work now. These companies real poor, aren't they? Got a lot of liabilities. Not very much equity. Give that a shot. Should make it cheaper. That a little better.
And then so retained earnings that would go over to beginning earnings for the next year. Yeah, and then
The same thing with computer capital.
so
Of course, because your owner's contribution go away from the start of the year. Your wealth doesn't go away from the start of the year. Now you're there.
No, I have them do it.
Yeah, the retained earnings is part of your asset. Retained earnings plus restricted capital, what the owners contribute, plus what you earn and retain, is your total wealth. So total equity is what? Retained earnings plus restricted capital. We're not controlling the restricted capital. Remember they contributed 35, right? Right. You got your restricted capital plus your retained earnings per share, right? All right, do it. Not exactly. I'll get there. Okay. Oh, ending, at the end, end there. So what you got is retained earnings, you start at the beginning. Add your net income or subtract your loss, whichever it is, right? And then subtract your dividend or minus debit. And then you get your ending. So I started with nothing. I ended up with 30. You added net income of 50. What's your dividend? So you want to really learn it this time?
Yeah, yeah.
You want to teach it more?
I want to go back to the one-on-one so that I don't have to take classes.
Get your head around the model. Okay.
well, retained earnings
Let's do it real quick, huh? Okay, guys? Are we ready? You did assets, liabilities, equity, revenues, expenses, net income. Okay, so and then I'm asking for information about contributed capital and retained earnings separately, so for those, we'll use T accounts maybe. Okay, so what do we know? I gave you no revenues, I gave you liabilities is 350, so did you write 350 down there? I hope. Okay, and then I didn't give you assets, but I gave you net income is 50. So I know that net income comes into retained earnings, don't I, guys? You added 50. Okay. All right, and then I gave you 30 for ending retained earnings, right, guys? Okay. Oh, by the way, what's the beginning balance for every account? 0, because it's the first year. What if it wasn't the first year? Well, you'd use the beginning balances, right? That makes sense? Okay. And we'll have you do that later. Okay, anyway, and then, so I've got 200 for expenses. Is that the only other thing I gave you? 200 for expenses, and I don't know the dividends, but I do know the dividends are going to come out of here, don't I? So what can I solve for? Revenue's pretty easy. What is it? 250, because I need a credit here for revenue. So when I take away my debit expenses, I get a net credit of 50, huh? And that's how I knew that net income here is a credit, because net income's a credit. It's increasing our wealth, isn't it? So this one's 250. Everybody agree with that? I got that answer. Okay, and then what else do I need? Oh, 35, I should pick that up, don't fail to do that. I got contributed capital coming in here at 35, which gives me an ending balance of 35. So what else could I do now? You could do your dividend. You started with nothing, right? You added 50 for a credit of net income, and you ended up with only a credit of 30. So what must have happened? The owners must have taken out how much? 20. Everybody good? So the dividend is 20, so we've got that one. Okay? Everybody see it? And then what else do I need? I have assets and liabilities I don't know, but what could I do? Add together the 35 contributed capital plus the 30 retained earnings, and what do you have? 65. Boy, this company's in horrible shape. 350 of liabilities on them, 65 of equity after their first year of operations. Ugly. Okay? They're ready to go bankrupt. Okay? Anyway, they better not lose very much money, huh? So what do we got here? We'd call them undercapitalized. They don't have enough equity. Right? Owners need to plug some money in their problem. They lost some money. Next year they could go bankrupt fast. Yeah.
For these quiz, we need to know that the beginning between earnings plus net income minus dividends equals the ending between earnings.
Absolutely. Will you have to know? Do you need to know that beginning retained earnings plus net income less dividends is ending retained earnings? You bet. You bet. For this quiz. This was the first quiz for last summer.
Are you ready for this one? Like, is it always going to be 0?
If it says it's his first year, it's 0.
0.
If it says it has a beginning balance for prior years, it's whatever it is.
Will that be given?
I don't know. If I did, so what? What if I told you the beginning balance was 100? You'd have 100 here and it worked down to 130. Big deal. What if I told you the beginning balance here was 50 and you added 35? Go to 85. Big deal.
So we could still solve it though, even if you didn't give us a beginning balance?
Oh, no. You have to know the beginning balance. If it says in the first year's beginning balance is 0, you have to do the change. We're just working with the change. So I see your question. So if you have a beginning balance, you use it, right? I gave it to you. If I don't give you one and I say it's the first year, though, I did give it the beginning balance, didn't I? 0 is the first year. So yeah, you have to have the beginning balance to work this. It'd be another unknown, right? However, if I did give you beginning and ending balances, I could leave out the beginning balance of the problem too. You have to work your way back to it.
Yeah.
We'll do that later. Yeah, absolutely. But I have to give you additional other information. Okay, so you want to try some of the other ones, guys?
Yeah.
A few more minutes, I think. Maybe let's do number 3, credit means. I actually give a point for that. Yeah. This is the easiest class. I don't understand how anybody has any trouble at all. All right, let's do number 4. You want to? 3 individuals, see you, form Reiner Corporation. Reiner had total revenues of 30 in the first year, 20A, and 45,000 in 20B. What's their beginning everything? Beginning balance in every account? 0, absolutely. Okay? And then they had total expenses of 22 and 33. Could you tell me what net income is pretty easy for each of those years? Revenues are 30 and expenses are 22, net income's 8, isn't it? Revenues 45, expenses are 33, net income the second year is 12. Everybody agree? And then the cash dividends paid out of 4 in 1 year and 6 in the next year. What do the dividends do? The net income does what to retained earnings do? Increases it, of course, right? You retained it, earned it. And then if you pay out dividends, that's the portion you didn't retain, so that would reduce retained earnings, wouldn't it? Okay? And what I want, though, is I'm not asking you for ending retained earnings, I'm asking you for ending stockholders' equity. So what's that going to be? Stockholders' equity is composed of what? Contributed capital plus retained earnings. So don't fail to include it. What if I ask for retained earnings? Well, they just give me retained earnings. Ignore the contributed capital, right? Answer what the question says. What do you say? Always a good idea. These questions are short, you guys. Read them real carefully. Circle the words that are important. Circle the numbers that are important before you start working the problem. Okay? Don't just start flailing away working the problem and then miss half the problem because you didn't read it all. Don't do that. It's real common. Okay? By the way, we do that at work all the time. We go to work and still don't know what we're doing, and we just dive in and do it and screw it all up, and then we have to figure out what we're doing and do it all again. Right? I do it all the time still. Right?
you come to talk to me about something and I'll anticipate what your question's gonna be before you get it out of your mouth, and I'll start answering your question. I don't wanna get a lot done. Well, it's not the questions you're gonna ask, it's kind of a waste of time, right? I do that all the time, knowing my students. Okay, so let's do it. How do you want to set this up? What do I want to know? I think I want to know contributed capital and retained earnings, or just stockholders' equity as a whole. It might be kind of nice to do it, though, separate and add the two together so I can see it better, maybe, huh? Or you can put it all in one, I don't care. So contributed capital, common stock, whatever, and retained earnings. What's the beginning balance? 0. Okay, and I'm going to do 2 years, so what I'm going to do, the question wants to know what it is at the end of each year, 20A and 20B, right? So let's do them separate. What happens in contributed capital? People make a contribution, right? So how much is contributed, they said? 300. Oh, 3 individuals, 100 each, as we say. Read carefully. A lot of people just put down 100 and they're wrong. Right? It's 300, isn't it? That would be debit cash 300 and credit contributed capital 300. So I know I got 300 there, don't I? Okay? All right, and then if you want, you can do an income statement if it helps you, right? Okay? For year A and year B, let's do income statements. Revenues less expenses is net income. So what's revenue for year A? 30. There it is right there, right? What's expenses? 22. What's net income? 8. So what happens with the net income? It gets added to retained earnings, doesn't it? Does everybody agree with that? Okay. Right now I have 308 total equity. Would everybody agree? 300 contributed capital plus 8 retained earnings is 308. And then what happens? Dividend comes out. How much was it? It was 4. Okay? So what do I have for ending retained earnings at the end of year A? Looks like 4. And if you earned 8, you took 4 out, you have 4 left. Did I do it right?
Expenses supposed to be 22.
Oh, 22. That's a 2. Sure it is. 30 less 22 is 8. Yeah, it's 22. I apologize. 22. Yes. Everybody good? So, my answer for the first year is what? 28 is what? 304. Everybody agree? Ah, good. What's my beginning balance going to be in contributed capital for the second year? The ending of 1 year. Here's a clue for you guys. When a year ends, a nanosecond later the new year begins. How many transactions happen? Actually, there's no time goes, right? How many transactions happen in between there? None. There's no time in between. So the ending balance of 1 year is always the beginning balance of the next year. Yeah, okay, anyway. There you go. Okay, anyway, so what do you think? What's the beginning balance? 300 for contributed capital and 4 for retained earnings, right? Does your wealth go away because you start a new year? Of course not. Okay, thank goodness. Okay, so in year B, what do we have? How much was revenues? 45. How much is expenses? There it is. Using what they gave me. Net income? 12. So I'm going to add some net income to retained earnings, aren't I, for year B? So now what do I have in retained earnings? 16. And then what did I do? Did a dividend. How much is the dividend? 6. So they earned 12 and paid out 6 in dividends. So, well, how much should I increase retained earnings by if I earned 12 and I paid 6 out to myself? How much should I leave in? 6. But I don't have 6 ending retained earnings because I started with 4. So if you start with 4 and then you add 6 to it, what do you have? 10. The ending at year B is 10. Does everybody agree with that? It's true, isn't it? If you start with nothing and you earn 8, you now have 8 in retained earnings. If you pay a dividend of 4, you now have 4 in retained earnings. If you now earn 12, you're up to 16. If you pay out a dividend of 6, it's down to 10, isn't it? What did I do to contributed capital this year?
Nothing. So is the contributed capital still there? Oh yeah. I'm not going to say my ending at 20B is only 10. What is it? Total equity. It's 300 contributed capital plus 10 retained earnings is 310, and we are brilliant people. We've got 2 whole points. Is this a lot of work for 2 points? Yeah, but it's 25 out of 650 points for the class. What would I do on a test with this? Give you maybe 4. Right? No, wait a minute. This is a 25-point quiz. I'd give you maybe 10, maybe 8, probably 8. Maybe 8 points to do something. Got the idea? Okay, or somewhere. 6, 7, 8. Should we do another one? I know you're excited. You can tell. Number 5, maybe? Okay. Abrams. Oh, by the way, can you guys think for 2 straight hours without going brain dead? Not yet, but you're going to get better at it. I want to get you so that you can do 8 straight hours, maybe 10, maybe 12 during busy season.
Yeah. It's a challenge work. You're thinking, get paid well. By the way, it sounds like an awful lot of work, but you have a really flexible lifestyle. Right? Come and go when you want. Right? And besides, the work is not flipping hamburgers. Right? The work is challenging and interesting. So, and pays well, all that stuff. All right, anyway, Abrahams, I guess, Corporation, number 5, reported the following amounts at the end of the first year of operations. So we've got contributed capital, sales revenue, assets, dividends, liabilities. What would retained earnings and total expenses be? This is just the same as the earlier problem, isn't it? Only simpler. Go ahead and do that. Fast, fast. Do it fast. Write down everything you know, it's all you don't know. Don't try and do these in your head. Just always seems the debits and credits seem to flip around like Everybody good? Good answers? What do you want to do? You report at the end of the first year, contributed capital, sales revenue, assets, dividends, liabilities, and I want retained earnings and total expenses. So how do you think you'd probably set this thing up? What'd you start with? Yeah. Do you really need all of that? No, but it doesn't make any difference, does it? I gave you assets, so you kind of think, well, maybe I need that. So you could, especially after having done that earlier problem, I want retained earnings and total expenses, so I probably need contributed capital and retained earnings. I know I'm going to have retained earnings, so yeah, we're going to go with that, right? Something along those lines. So here we go. Let's write down what we know. It says contributed capital is 40. Fine. That's 40. Okay. It says sales revenue is 180. Great. It says total assets are 130. Says dividends are 5. You can take the dividends out, right, guys? Okay. And we'll have the
net income come in. It says liabilities are 80, so I guess I do need it all. Huh, what's ending equity? 50. Calculate that one, huh? Of course, they didn't ask for that, but who cares? Okay. If ending contributed capital is 40, right? The first year of operation, so I started with nothing, right? So my beginning was nothing. How much did I contribute during the year? 40, obviously. Okay. And if I took 5 out of retained earnings, what's ending retained earnings? Let's see. Total equity is 50, isn't it? Contributed capital is 40. What's ending retained earnings? 10. I know one of the answers is 10, isn't it? Everybody see that? That's 10,000. Okay, got that one. Okay, and then what's net income? Yeah, net income must have been, why did that? Okay, net income is, net income must be 15 here. Everybody agree with that one? If your dividend is 5, you start with nothing, right? If you took 5 out with the dividend, and you have 10 left at the end in retained earnings, how much did you earn? 15. If net income is 15 and revenues were 180, what's expenses? 165. And we've got that answer, and I'm going on with my life now. Okay? How fast could you do that? Okay, I know that equity is 50, my assets are 130, and my liabilities are 80. What must the equity be? 50. If the ending contributed capital is 40, and my total equity is 50, what's retained earnings?
10,
You got it. They have to add together, don't they? Your contributed capital is what the owners invested. Your retained earnings is what you earned and kept. So what's your wealth? So those two added together. So if you know the 50 and you know the 40, can you get the 10? Absolutely. That's it. So now I have 0 beginning retained earnings, 5 dividend, 10 ending retained earnings, and therefore I got 15 net income done. You see it? Do one piece at a time, one piece at a time. Whatever you can solve, right? If there are 2 unknowns, don't try to solve that one. Find the ones with 1 unknown and you can solve it. Then take that answer and use it, right? Fill in one of the other unknowns. That's sort of the trick. And this may seem like, well, this is kind of silly. You're turning it into a little math problem. In real life, we do this, you guys. You have some information, you don't have other information. You're trying to figure out where you're at. This is nice. Okay, you know these relationships. Okay, so pays off. Did that do it? Did I answer your question?
Yeah.
Okay, good. We're there. All right, so let's try 6, huh? Okay, on 6 it says accounts payable has a beginning balance of $1,200, and we purchased 8,000 of inventory on credit during the month. The ending balance is $1,900. How much did we pay our creditors? Okay, so what account are we working on here? I want to know how much I paid my creditors. What would be my journal entry for paying my creditors? People I owe money. I bought that stuff on account. It'd be a liability named what? Accounts payable. I'm probably analyzing accounts payable. I bet you anything, right? But what I don't really want the account payable. What I really want is how much cash went out, huh? What's the journal entry when I buy things? Let's say I'm buying inventory that I'm going to resell. What's the journal entry if I buy inventory on account? What do I have more of if I buy inventory? Inventory. I call it merchandise inventory, and it is going to be a asset. And if I have more, what do? Debit it. So you always go back to that. So merchandise inventory gets debited for whatever the amount is. Got it? And then credit what? No, I bought it on account. Most businesses selling to businesses, it's usually on account. We don't have cash, right, to hand people when they deliver the product to us. We pay them later. They trust us. Open account. So it'd be debit, merchandise inventory, and credit accounts payable. And that must be what they're doing here based on the fact that we said we have the balance in accounts payable, right? Okay? So then what do we do when we pay them? What do you pay them with? Which is an asset. You have less, so you'd credit cash, wouldn't you? For some number. Everybody got it? And what would you debit, of course, when you pay it? I'm paying off the account payable. Does everybody see that? Those are the 2 entries, right? Debit, merchandise inventory, credit accounts payable when you buy it. Makes sense, doesn't it? You got an asset, you're going to pay for it later, right? And then debit accounts payable because you reduce the liability when you paid them, and credit cash. And what this problem is asking for is how much do we pay our creditors, right guys? Everybody see that? That's this credit to cash I'm looking for. How can I get it? Well, let's see what this thing gave me. I want to know what got credited to cash here, okay? What do I know? This is 1,200. I'm going to write down everything I know. That's 1,200. Then what happened? That's that one. What else do we know? Yeah, so I debited inventory for 8,000 and I credited accounts payable for 8,000. I do know how much that was. So inventory would have gone up by 8,000, and what would have happened to accounts payable? It would have gone up by 8,000. What does that make my balance in accounts payable if I started with 1,200 and I added 8,000 to it? 9,200. Everybody agree? And then what else do I have for information here? The ending is 1,900. So my ending balance in accounts payable. By the way, why am I putting the balance for accounts payable on the right-hand side? It's a liability, so it's a credit, right? Because liability is on the right-hand side of the accounting equation. See how important it is for you to have that model down? It gets impossible real fast, doesn't it? Okay? All right, so you know what? I started with 1,200, and I ended up with 1,900. I bet I paid for 700 less than I bought. You think so? You know, I owed all my suppliers 1,200. Now I owe them 1,900. I bet I bought 700 more than I paid for. Everybody agree to that? And you bought 8,000, so what's that going to be? 7,300 probably? But you can just calculate it. 1,200 plus 8,000 is 9,200. Less the amount you paid. Here's what you paid, right? It's debit accounts payable, credit cash is 1,900. What is that number? 7,300. It's debit accounts payable 7,300 and credit cash 7,300. You don't have to write down these entries unless it helps you. If it helps you get the answer faster, what the heck? Why not? So it'd be debit accounts payable and credit cash 7,300. And I know that the answer is 7,300, and I'm brilliant. Okay? Got it, guys? Can you do it? I could give you any account, couldn't I? Tell you what the beginning balance is, ending balance is, how much you added to the account, how much you took out of the account. If I give you 3 of those 4 things, can you solve the other one? Every time. Every time you could do it, right? Maybe not yet, but tomorrow, of course. Now, by the time of the test, is what I want, of course. Okay, so we only got a couple more. We got 2 more minutes. So what about these? It's kind of different. Actually, if you know the journal entry, you got it made. The sale of services, what are we on, number 7? 7? Okay. Don't look so bored when you say it. I'm excited to be here. They've only been here for about 2 hours. Just getting started, aren't they? How many hours are you going to work today?
4.
4 at work?
5.
5 at work, 4 here, and then you're going to go study. She's already got a job at the CPA. What's your name again, remind me?
Ashley?
This is Ashley, everybody. You want to know Ashley. You know why? When her firm decides to hire somebody in a couple years, they're going to ask her who they should hire. I'm not kidding. She's not very bright, but she works hard. Right? Not like me. Anybody who thinks they're really bright has an ego problem. Nobody's very bright. Not. Just people. Right? Hard work. Hard work. Hard work. Oh, maybe she's moderately intelligent. Come on. You know your IQ score?
No.
Do you care? No, I don't even. Yeah. I don't know yours or mine. I don't care. How would you approach this? It's liabilities, equity, revenues, or, liabilities, revenues, equity, assets, expenses. Oh, fine. It's a balance sheet income statement. What would be the effect on it of a journal entry? Tell me what the entry is. The sale of services to customer on credit would have the following effect. Increase, decrease, no change. What's the entry? Debit what? I am selling stuff on credit. Debit what? Credit what? I sold stuff. What do you want to credit? Well, not credit. You want to debit accounts receivable because they owe you, right? The asset. What do you want to credit because you sold them stuff? Yeah, service revenue, sales revenue, something like that. Okay, so it's going to be debit accounts receivable. Everybody agree? And credit sales. Isn't that true? This is an asset account, that's a revenue account. I know that, or I can't do the journal entry. So you tell me, what happens to liabilities if you don't do a debit or a credit to liabilities? No change, so it'd be nothing. So we put the no change in there. Everybody agree? Oh, right now, wow, come on. No change, okay? Revenues, what did I do? I credited it. That's increase, isn't it? I have to know that's increase or I can't do the journal entry. So it's increase. And do you have to write this journal entry down to answer this? No. But if it keeps you from screwing up, how long did it take to write down the entry? So I wasn't talking so much. Second, 3 seconds. Okay, equity. Careful. Yeah, assets equal liabilities plus equity. Revenues less expenses. It's net income. So anytime I change the income statement, I change retained earnings, don't I? So this credit to sales increases revenues, right? Which increases net income, which does what to equity? Increases it. The other thing we did was we increased assets there, huh? Staying in balance there. Everybody see it? Okay, so what happened to equity? It increased by the same amount revenues went up by. What happened to assets, of course, seeing as accounts receivable is an asset? It went up too. What happened to expenses, seeing as I didn't debit or credit an expense? No change. This is too easy to believe, huh? Okay, so let's try the next one. Same deal. Increase or decrease, or no change. Indicate how borrowing cash from the bank would affect the following accounts. What would that look like? What's the journal entry? I borrowed something from the bank. What did I borrow from? Cash. What do I want to debit? No. Debit. Cash. I debit cash, right? I borrowed, didn't I? I borrowed cash from the bank. So I'm going to debit cash, increasing the asset. What do I want to credit? I know you guys get tired. An account, not an account payable though, right? Because it'd be a bank, so it'd be a what? Note payable, but it's still a liability, so. All right, everybody got it? I'm increasing an asset and I'm increasing a liability. What did I do to revenues and expenses? Nothing. What did I do to equity? Nothing. I didn't hit one of those accounts. So what would you say? Liabilities did what? Increased. Revenues did what? No effect. Equity did what? No effect. Assets did what? Increase. Expenses did what? No effect. How can anybody think this is a hard class? Good joke. It's easy, isn't it, guys? Let yourself relax and think. Study your ass off. Know everything you possibly can. And then what? When you're coming in here, remind yourself this quiz does not determine what the grade is. Just relax. Don't study tomorrow morning. Study tonight, today night. Get a good night's sleep. Come in tomorrow, and as you're walking in, or you're driving, you know what you're doing, right? Tell yourself, is that ready? Ask me to do stuff I don't know how to do, neither does anybody else. I'm ready, right? Take a deep breath, relax, come in here, and let yourself think, right? Let yourself figure this out. That's what we want you to do when you go to work. We don't want you to try to remember how to do stuff. You'll just sit there and do nothing, spin your wheels. We want you to go in confident, relaxed, and work. And things will just happen. It's amazing. It will just happen. So, go away. You can use the whole time. Why did I do this class this summer? I don't mean me, I mean you. I'm doing it because I'm having fun. And it paid me a little bit to do nothing. It's bullshit. See ya. Got it all right. Know everything. Good.